Today is Tuesday, March 25th. I'm an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same-ish. I did keep a little bit of TQQQ short. Tesla, I got all out of Tesla today. The more aggressive, I know I kept it overnight, but it was a more aggressive day trade that I took yesterday afternoon, yesterday after hours, then fully covered into the down move this morning. And then the new position that I got into with Tesla is a little bit bigger picture and significantly smaller. I think I have 1/10 of the Tesla short tonight than I did yesterday, but it's a pretty different trade. All the longs are the same, but many of them continue to reduce in size as they go up. And a couple of them are getting to the point where I might get fully out soon if I can get a little bit higher. Let's talk about the market. All right, so we had a kind of day two today. SPYs are up 0.25%. Qs for sure gave a day 2 0.6%. It was really a Mag 7 day today because the IWM is down. And if you look at the RSP, the equal weighted S&P, it's down. There were, I'm pretty sure, more decliners in the S&P than there were advancers in the S&P today. So it was a very poor breath day, but we were led higher by the heavyweights. Apple up 1.25%, Amazon up 1.25%, Google up 1.75%, Meta up 1.2%. I don't know why I'm typing up Netflix. Netflix up 3%. We don't even count that as a FANG name anymore. NVIDIA was relatively weak. NVIDIA was red, but only down 0.7%. Tesla up 4.4%. And AVGO was weak too. So AVGO and NVIDIA were the weaker ones, but all the other names in the Mag 7. Oh, Microsoft, I forgot to mention. Microsoft's only up 0.5%. I thought it was more than that. But yeah, it was really a day where the mega cap weighted stocks pushed the S&P and pushed the NASDAQ higher within the confines of the equal weighted S&P actually being negative, the IWM being negative, and the average stock in the S&P being negative. So not necessarily a great day, but if we look at these charts of the indexes, you can see the follow through, especially in the Qs. So SPYs here, it was actually a really tight daily candle. This is probably the tightest range of any trading session that we have had since the breakdown. And that's not necessarily surprising to see vol begin to get a little bit more compressed here, which, as we know, can actually help push bigger buying higher from the vol control funds, which should be set to start really buying again on Thursday. They are definitely a tailwind to this market right now. I'll just review that data from Pat's note again real quick because I never closed out the tab. Pat's note here is summarizing a note, which is summarizing a note from Charlie McElligott at Nomura, and it just shows the vol control buyers that are really set to start in earnest on Thursday and could be pretty big buyers next week if realized vol stays low. So today was a 0.25% S&P day, so that helps with this lower average move here over the course of the next week or so. So if we can continue to get days like today where we are only up and down a 0.25% on average over the course of the next week or so, it'll lead to over $34 billion worth of buying from vol control in the S&P. So it's a really strong underlying bid that can continue to sorry, I got distracted by a position that can continue to come into the market if it stays that way. Already as we're set, starting on Thursday, so there's a little bit of buying that's going to come in this week, but next week is that big week. And April, the beginning of April, I think has positive seasonality as well. So, my thought process, I said it in the morning meeting, I'll say it again today, we are getting close to fulfilling my upside expectations on the initial bounce from where we were in the market. If we get a little bit further, really more like SPY 580, we'd be fully getting through my expectations. From that point forward, at least in the short run, there should continue to be at least some degree of an underlying bid to this market that's coming from the systematics, from the CTAs, from the vol control, and then through the end of March here, we also have the pension rebalance, which should be giving us some positive flows into equities as well. So I really think that data shows that at a minimum, we are not going to be going into a sell-off like what we saw here in the second half of February and the first half of March with that rate of descent to the downside. At a minimum, there should be some underlying floor in this market, some degree of a bid that we run into any down moves that last for the next at least week or so, probably through the first week in April. And the question is, can we really get further follow through to the upside? And I think further follow through to the upside, again, we do have some support from systematics, but we have to see whether or not the long short funds, which we know sold a lot on the way down, and the long only funds, which sold a lot over the course of the last 4 weeks, really step back in to become buyers again. And there could be some degree of chasing that comes in from them if the market continues higher. It's not that unusual to see that. But I think that a lot of those more macro long short managers really want to wait to see a little bit more clarity on the April 2nd event that we're getting headlines on literally every day. And everything that we've seen so far this week, for the most part, has been incrementally positive on tariffs. It seems like Trump just kind of continues to pull back on the degree of tariffs and make exceptions. And we saw more positive headlines today about how Canada and Mexico seem like they're willing to play ball. We had positive headlines this morning coming from India, which I actually thought were some of the best headlines I've seen in a while. We'll see what happens with the EU, but it does seem like those headlines are incrementally turning positive. We'll see what things really look like as we get through that April 2nd date, and we'll see if those long short managers feel comfortable re-risking or not. And I really think that clarity is the difference between whether or not we have an absolute bottom that has occurred here in March and we can begin to work our way back towards SPY 600 plus, or whether or not we see rotation further out of the U.S. and into foreign markets. And part of that will go hand in hand with the continued updates on numbers of general economic growth, inflation, jobs, things of that nature, which will continue to come out. I don't think that we've seen the impacts yet in the job numbers of like the government layoffs and any secondary impacts of those layoffs yet, from my understanding. So that'll creep in at a certain point, and we'll have to digest that. So as we get closer to SPY 580, that is the area where I was really targeting for the bigger bounce. So yesterday and today have been more about just booking profit and getting paid on the good previous work that I had already done when the market was in the crapper earlier this month. It's not been an area yet where I've had a lot of conviction to do a lot new, and I think that that's fine. I'm not a CNBC pundit who needs to always have an opinion on market direction every moment of every day. I actually think that one of the best things you can do as a trader, and I talked about this yesterday a little bit, one of the best things you can do as a trader is when the market's at a point where you really do feel like it's becoming a little bit more of a coin toss, to say, hey, I have heightened uncertainty here. I don't want to put as much risk on. It doesn't make sense for me to push it when I don't feel like I have a strong advantage. And that's pretty much where I'm at. So the closer we get to SPY 580, the more I'm getting to a more neutral book on my swing positions. I don't know if I can just do the math right now off the top of my head, because I have to add up a couple different positions, but I'm definitely still net long. I'm just trying to figure out how much I'm net long by. That plus that equals that. It's me to kept this small T-triple Q position. 3. So, I don't know. I probably have, I'm doing this rough really quick. I probably have now like a third of the net long exposure here now that I had at those lows. So I've been, fairly rapidly reducing that as we get closer to that 580. I am still net long, but at like 1/3 of the degree that I was at lows when my conviction for the bigger bounce started to come in. So it's been, primarily booking profit on the way up, and then also to get myself to be a little bit more neutral in the portfolio. I started shorts on a couple names much earlier than I would have if I was flat. So in Palantir, I've got a good bit more stock on the short side than I would have had if I was flat. I was really happy with how Palantir traded today. I felt like Palantir should have been actually significantly higher. Is there anything going on in VKTX right now? I don't know if anybody sees the headline, but it's a pretty decent after-hours uptick. That thing was super weak today. Very disappointing. Sorry, 1 second. Okay. Yeah, so I started Palantir earlier than I would have otherwise, and heavier than I would have otherwise. Really, I was looking for more like extension into 100 to consider to put that short on. Tesla, again, yesterday was more of a day trade. I got out of that into the down move this morning. I reinitiated a small position. I'm also doing this earlier than I would have otherwise. I had been giving a broad zone of like 280 to 300 is where I would consider beginning to reshort this thing. 290 is obviously within that zone, but I only really wanted to put that trade on in conjunction with me getting more comfortable about the SPYs and Qs actually hitting my upside targets, because what my thought process has been, and has turned out to be correct, is that the most beaten up stocks, these Teslas, these Palantirs, some of the more expensive stocks that got really hurt in this February-March move would actually be the leaders into the bounce back of the up move. So Tesla just giving a third really, really strong day here. And again, that was an awesome 240 call out for the long if anybody took that. Not my trade right now, but gave you $50 in 3 days. So really, really good trade. I've kept a little bit of Tesla short, but again, only doing that because of the extent of the longs that I have on. Otherwise, I'd be looking for the Qs to get a little bit higher. And really, Tesla looks like it's going to 300 at this point, especially if the Qs can give a little bit further continuation. And then that might be where the better short is. There's a little bit of resistance up at 300. And then I took like a day trade in the Qs today that I even described it as a boredom trade, which it was. I ended up break even on that. But then I decided into the close to keep a very little bit and take that day trade and kind of transform it into something that's also a little bit of a bigger picture trade. I would be all out of it if T-triple-Q gets back to 66, which is basically today's low, but I will also build into that further if the Qs continue to go higher. So the bottom line is, like I just said, as these Qs work their way closer towards 500, as these SPYs work their way closer towards 580, I just want to be getting more and more market neutral. I know that I'm not going to just be out of all my longs at SPY 580 or QQQ 500, so I want to start building into some shorts as well to be able to play both sides of kind of my scaling strategy spectrum that I do as we get to a much more market neutral area after a really big bounce. And especially if we can get a gap up tomorrow, I know Pat was talking about this. If we could get a decent gap up tomorrow, we might actually be getting into extreme upside extension for the market. That short-term tactical in Pat's note, I didn't mention it in the morning meeting because it's still neutral, but short-term tactical was actually approaching the red zone as of yesterday's close. Today being a little bit more of a rest day, it probably was not enough to push it in the red zone, but if you could get like a big gap up tomorrow, you'd be getting like these Qs into thanks, Josh. Give me 1 second on that. I just in case this thing starts moving, I want to be prepared for it. Forget exactly where I was with what I was saying, but basically I was just talking about, if we can get a gap up tomorrow. So Q's right here closed at 494 with the ADMA down to 485. So we closed at $9 of upside extension in the Q's. That ADMA will be higher tomorrow, but if we get a big gap up tomorrow, if we gap up to, I don't know, 497, 498 tomorrow, we'll be gapping into extreme extension on like a day 4 up. And that's something that I would then start to really like a lot more as a short, potentially on multiple time frames. The bigger picture short, but also like a smaller picture gap up short into extreme extension on a day 4 is a trade that I just kind of always like. With that said, it doesn't seem to me like most market participants outside of us were prepared for this bounce. So that sometimes can really enable it to overshoot. I mean, as I said it out loud, I mean, just so much credit here to our team and to the teamwork. Like, I don't know anybody out there, seriously, and I'm not trying to toot my own horn with this, but I guess I am a little bit as well. I don't know anybody out there, anybody, honestly, in any circles of the markets that just called everything as perfectly as we have over the course of this last month. It's really, really been incredible, from the short at the highs to the buy at the lows to, you know, where we've snapped back to. I mean, it's just such a good job, and you know, give myself a little bit of credit for it because I'm, you know, kind of the one who's guiding a little bit with some of these meetings, but I definitely couldn't do it without the teamwork that comes from all of you guys providing the information that enables me to put together what I feel is a logical thought process that has worked out just so well for us at that high and then at that low and then for this bounce back. I mean, it's just really, really been incredible. But anyway, no one seems like they're positioned properly for this long move in the same way that no one was positioned for this down move except us, which has the impact sometimes of really creating the overshoots, which is what I had been talking about when I was originally saying we might get a bounce back in this market that really overshoots the 21 EMA because everyone's now hedged for downside risk and downside continuation, and no one actually has the longs on. So it's just been a great job. And that's why I'm not like, this has now been a big move. We had a day 3 today. We're overshooting the 21 EMA. I've been really, really trying to caution patience on getting back into the short side. In the exact same way, but almost in reverse, into the down move. Normally, when we hit that like $10, $11, $12 of extension, that's when I want to be leaning into the buys. And we have been calling out, let's be extra patient in this down move. No one's prepared for it. Everyone's way too long. And it's only going to be when we get to $15, $16, $17 of downside extension from the ADMA on the daily that the market becomes viable for bounce backs. And we nailed every small time frame bounce back. Not that there were many, but I remember we were buying on February 28th for like a day trade. We were buying on March 4th for the exact same thing. We were buying on March 7th for the exact same thing. But it was only when we were getting to $17 of downside extension in the SPYs, 20 plus in the Qs, that we felt we could actually get those day trade bounce backs. And now it's almost the same thing in reverse here, where normally in a weak market, you bounce all the way back to the 21 EMA. It's like, all right, we should be leaning into the shorts. That would mean that you would have started shorting yesterday. And instead, I'm saying, hey, I think it's a great opportunity to book profit on the longs that we discussed. But I don't think I think you're jumping the gun a little bit if you're already starting to short, because no one has long exposure, which means we can overshoot to the upside. And if you start shorting too early, you can get hurt. And even now, when I'm talking about me being short Palantir, Tesla, TQQQ, I'm saying the only reason I even put those shorts on at all at this point is just because Sometimes I'm wrong. We might not get to QQQ 500. We might not get to SPY 580. I'm wrong all the time, actually. Um, and in case I am wrong on that, I want to have some of these shorts on the books that get me a little bit more to being market neutral in case we create a pivot higher earlier than I think can actually happen and we go down. But if I'm flat this market, I would say that me shorting Tesla, Palantir, and potentially the Qs where I am is a little bit too early for that trade still, at least on the bigger picture. And if we can push extreme upside extension maybe through like a big gap up or big continuation tomorrow, then finally we might be at the point where it actually makes better risk reward sense to actually put the shorts on. And I'm just a little bit early still with what I'm doing, and I'm also still not long. So that's pretty much all I got. But outside of just kind of working on de-risking into the up move, I'm doing very little that's new here. If I can find a cute day trade here or there that I am interested in, I'll take it. But as far as like big money, big picture trades, still not really doing too much new at this point. So that's pretty much all that I've got on my side. I am happy to, like always, take a look at whatever you guys have or whatever questions you guys have. And I'll take them in the order in which I see them. First thing I think I'm seeing in here is from Eli and the VTF at 423. You think if we gap up, it'd give us pretty good opportunity to load up into shorts. You're itching on that short button. I know you are because you keep asking. Yeah, kind of was just talking about that. I do think that if we have a big enough of a gap up tomorrow or maybe a gap up at an opening trade higher, we finally are getting enough actual upside extension and it becomes a day 4 up that I like the idea of starting to put on some more real shorts into that. So again, Qs are closing at 495, ADMA's at 485. We've got $9 of extension. It's going to be a little bit higher tomorrow. So like QQQ, I don't know, somewhere between 496 and 498 might be a good spot to, if we can get there early tomorrow, say, all right, I'm willing to actually put on some shorts. And for the SPYs, it's going to be more like, they're not as extended. It's going to be more like probably that 580, honestly, to actually do it, which has been my target to begin with. It's always preferable if we can have multiple indexes giving us that same message at the same time. The Qs are starting to get there. The SPYs are further away. The IWM, which had a red day today, is not. So we'll see. TTD, what's your target? Josh just let us know that TTD had an upgrade from SFRA. I don't know who that is. I don't know if I've heard of them before. Upgrades TTD to a buy, $97 target. We see TTD benefiting from several growth drivers, including CTV, expansion of its international business, and a growing retail media opportunity. We believe the shift toward more ad-supported options will allow TTD to outgrow the digital ad market by at least 1.5 to 2x through 2026. So for me, a main target where I'll be taking a lot of size off is $65, but I have been selling some every 25 cents up. So I've been reducing some TTD every 25 cents up. I have a main target at 65 where I will be reducing, and then beyond that I'm looking for an extra, sorry, I'm just trying to do some math in my head. An extra $5 beyond that or so 70. So 65 is a big target, and then by 70 I probably would be nearly all out at that point if we can get up there. But like I also said, I am selling some every 25 cents up, so I already have a good bit less than I had at Lowe's. It's TTD. Friday is the JP Morgan collar trade. What do I think of it? Yeah, I am not super knowledgeable on that. Would probably more want Bill K's input on it than anything. It definitely has an impact on market structure and market dynamics, and I think that they'll re-roll that trade into something new, but I'm not sure like what the important strikes would be on that. I think we're pretty far away from whatever the number is for the current March one that is on, and the further away we get from it, the less of an impact it has in terms of the hedging needs of the dealers who are on the other side. So let's see what happens if it rolls into April. So I don't really have a lot for you on that one. I was actually reading a little bit about it this morning and trying to garner some more information and a thought process on the impact of it, but I didn't really reach a strong conclusion, and then I got interrupted. So I don't really have too much for you on it, but it's definitely an educated question to be asking. From TT, I pushed it, fought hard, but got beat up because I didn't train hard enough. I have no idea what you're talking about, but train hard, win easy. Thoughts on SMCI? No new thoughts on SMCI. I don't like how it's trading. Semiconductors were weak in general today. We looked at that 4250 level in the morning meeting today, because 4250 is a little bit of an important level, and so it's a potential buy, is what we said in the morning, through 4250. But also, I really didn't like how it traded yesterday. It had a downgrade yesterday, but it was super relatively weak. So it's like, yeah, you can still take the 4250 trigger today on a trade, but it was super relatively weak yesterday. So I'm just not in love with it, and I'm still not in love with it. And today, it didn't trade well, but granted, most semiconductor names didn't trade well. It triggered through that 4250 at the open. So if you bought that, unfortunately, it looks like a push-through failure, and the opening bar low had so much risk on that. If you bought 4250, you really had to give it to day lows to trade it right, which probably would mean that I wouldn't take it at all, because I would not come in this thing and risk 70 cents in that spot. It's just a little bit too much. Did it work up to at least? It did work up to 4340, so actually you might have been able to get your risk covered on it, even if you gave it all the way down to lows. And then it failed. So hopefully if anybody took that through 4250 today, they traded it properly and were able to get their risk covered. But we'll see. Outside of that, I don't know. SMCI it kind of looks a little bit like dead money. It's worth keeping an eye on that $42.50 to $43 as a potential technical catalyst for an upside trigger, but the stock's not trading well. From Varun, is it worth looking for more upside in the IWM? It's worth it. Did not like how the Russell was relatively weak today, but it was just one day. Overall, it was kind of leading the initial strength down at lows. I keep thinking about what Tate said like some weeks back about IWM being the true leader of the entire market. I can't kind of get it out of my head because I see it more often happening, including in the relative strength that it actually showed down here before the entire market rallied. And now I'm looking at the relative weakness today, but it's only one day, and I'm like, ooh, the market's getting closer to the areas where that are my target, and now all of a sudden the IWM's getting a little bit weaker. It's just kind of interesting. I don't know. I think that there's more upside potential for the entirety of the market here, but the higher we go, the more uncertain I am. So I don't have too much else for you on that. 100% Vikas. Agree with you. CFRA is a research shot. Thank you. Is my cost basis below Snap? Below zero in Snap at this point? I don't think so. I'm trying to look at a spreadsheet really quick. I would have to do some additional math. No, it's not below zero, but it's probably below 5. So yeah, I'm not going anywhere on that. I kind of don't like it, but I just have made so much money in it that I don't want to stop trading it. From Richard, one more technical question. How to find a good trail stop level? I find myself on multiple occasions striking my trail stop too early, which caused me to earn less and feels like losing money. Sure. So knowing how to trail properly is really important. I'm trying to think of something that might have had a good uptrend today that I could use as an example, but nothing's really coming to mind because the market didn't do too much today. Just typing up a couple of these strong names. So basically, I have 3 main trailing rules. I go over this in a class in my training program, and that class is over an hour long. So it's too difficult for me to get into too much detail in just an afternoon meeting. But first, you have to choose your time frame that you want to trail on. So generally speaking, the larger the time frame that you're going to trail on, the more you're going to be willing to give back, but the more you can potentially make. So trailing on larger time frames is higher risk reward than trailing on smaller time frames. But if you trail on like a 5-minute chart, you're almost never, even if you trail it properly with my rules, you're almost never going to not get stopped out if you trail something tightly on a 5-minute chart, even per my rules. And my rules are pivot low, ADMA catch up, new highs. Those are the 3 rules. So basically, I just have a 5-minute chart of Apple up right now. It's not a fantastic example, but TT giving us some notes here. So that might be able to help you as well, Richard. But basically, you need a pivot low. So where are there pivot lows in Apple on the way up? So this opening low at 935 is a pivot low. Arguably, this 940 low is a pivot low. This pullback here on this red candle at 10 a.m. becomes a pivot low. This becomes a pivot low at 10:35. This becomes a potential pivot low at 11:20. So those are all pivot lows. So you could be trailing versus this low, 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 all the way on the way up. But that's just one rule. Rule 2 is that the ADMA needs to be at least that price. So on the first pivot low, it's below the ADMA, so immediately it's good to go. On the second pivot low that I mentioned at 940, when that first happens, that pivot comes in at 221 spot 29, but the ADMA is at 220 spot 80. So the ADMA is trading about 50 cents below the potential pivot. I will not raise my stop to this low until the ADMA is at least that price. So I said that's 221.29, 221 spot 29. 221 spot 29 is not achieved until 9:55 a.m. At 9:55 a.m., the ADMA is at 221 spot 57, which is higher than this low. So it's only at 9:55 a.m. would I consider actually using this as a pivot low to trail on, because I need it to be confirmed by the ADMA. I'm a big believer in, if the ADMA, which represents the upper band of equilibrium, for any time frame that I'm looking at, if I don't like having stops really ever above the ADMA, if that's a long, on the time frame that I'm looking at, because there becomes a very high probability of a shakeout. If you're using a stop that is above the ADMA on whatever time frame you're trading, you are relying on pure momentum to actually pay you. And every once in a while I do that. Every once in a while I take a trade that I characterize as a pure momentum trade, which means that my stop is above the ADMA. But if I'm taking a trade like that, I am saying to myself out loud, don't be upset when you get stopped out of this trade and eventually the stock moves higher. There's a very high probability of a shakeout. So I want a pivot low to be confirmed by the ADMA. The ADMA is at least at that price. And I also want a new high to have come in. That's the third rule, a new high. So same deal here. The new high doesn't actually come in on Apple until 9:55. So I would, on the 9:55 candle, all three of my trailing rules are satisfied, where I could now raise the stop to the 9:40 low. Next pivot comes in at 10 a.m. ADM, the price of that pivot low is 222.06. The ADMA catches up to 222.06 on the 10-10 bar, which is also when you get a new high. All three rules are satisfied, I can raise it. Next pivot low comes in below the ADMA. So pivot low, ADMA are satisfied right away, but I technically would not raise my stop until we get a new price high, which does not come in until 10:50. So only at 10:50 are all three of my rules satisfied, where I'd raise my stop to here. On this one, I get a pivot low at 11:20. It also is below the ADMA. First two rules are satisfied. I never get a new high. I'll never raise my stop to that low, which means that I am not getting shaken out at 12:30 when a new low comes in. Nor am I getting shaken out at, this is actually a perfect example. This is exactly why my rules exist. Those three rules exist to minimize getting shaken out of trades that still move higher. It can still happen, but it's to minimize it. So because the new high never came in, I'm not trailing to this pivot. I never get stopped out at this low. No new high comes in here either. I never get stopped out at this low. So in theory, if you actually trailed Apple based on a 5-minute chart based on my rules, you would still have it at the close at the end of the day. Now, with that said, with that said, most of the time, if you trail on a 5-minute, even if you follow those rules, you're actually going to get stopped out at some point intraday. 5-minute trends very, very rarely hold out throughout the entirety of the day, even though Apple, which I chose for just this random example today, actually did. So the other thing that you want to consider doing is trailing on different time frames, or sometimes trailing on multiple time frames, depending on how much stock you have. So if you have 1,000 shares, maybe some of it you're saying you're going to just sell incrementally on the way up. Maybe some of it you say you're going to trail on a 5-minute chart. Maybe some of it you say, I'm going to be giving a little bit more risk. I'm willing to give back more to potentially make more by trailing it on a 15-minute chart. Yeah, 15-minute chart, you have a much higher probability of not getting stopped out. So intraday. So basically, a lot of times what I'm asking myself when I'm choosing what time frames I want to trail on is this something I would potentially want to swing or not? If it's something I potentially would want to swing, then I'm going to be trailing a lot more on a 15-minute chart. I might even trail some on an hourly chart. I might even be willing to give some all the way back to my original stop loss and not trail it at all. If it's something where it's like, I got this trade on, I don't love it, I want to be booking my profit a little bit more quickly, I don't want new swing long exposure because I either don't like the daily chart or because I already have enough, then I'm going to trail it on a 5-minute chart knowing that I'm probably going to get stopped out at some point, and that's fine because I am purposely wanting to give it some room to be able to go, but be able to book profit. The one thing that we do have to remember from a psychology perspective about trailing stops is that you will never liquidate your position at your maximum P&L, and you have to be okay with that. Inherently, you are willing to give some back in order to make more. Therefore, you will never liquidate your position at your highest P&L, and therefore, based on how trading psychology works for many of us traders, we will never be fully happy and fully satisfied when a trailing stop triggers because you remember how much you were up at a certain point and that you finished up by less than that actual amount. But you got to remember that in the bigger picture, it worked out better for you because you probably would have just fully liquidated the position at a much lower price anyway and not even have held it as long as you actually did. So hope that helps, Richard. Follow-up question from Pete. When you get the new high, where did you say your stop is? At the pivot low, whatever the pivot low candle, last pivot low candle is. So the trailing stop, the price I'm always using is going to be 1 penny below the low of any pivot, but the ADMA and new highs are confirmation that I'm actually allowed to use it. So I have a pivot low. The pivot lows are always where the trailing stop lows will be. The trailing stops will be at the pivot low, but I only will actually utilize the pivot low for the stop loss if I have confirmation from the other two rules, which is ADMA catch up and new highs. Hope that helps. No problem, Richard. Scrolling back up. Yeah, MSTR is weird. The weird thing about MSTR is the puts we were seeing that have been hitting recently, like these 150 puts that people are buying for relatively not too far out, for like April or May, I think, that have like $130, $150 strikes. It's really interesting to see them go off, but the stock is continuing to be super strong. And then I guess it got upgraded here after hours. This is another one. This one I haven't started shorting yet. Started with a little bit with Palantir and Tesla and TQQQ, but it's definitely another one that I have on my list to short when I feel it's the right time at the index level. From Vikas, I've had Tesla since Friday. Nice. I sold much of my position on the opening day. I have burned in the past holding things too long after big moves. The end of day strength was a surprise. I am not going to get back in now. My target was a price between the 8 and 21 EM and the daily. I hit it this morning and I was out by late morning. Thoughts on how to think about scaling out of positions? Sure. So you're mentioning one thing, like I've been burned in the past holding positions for too long. So that's definitely something that's notable. And maybe that means that there is a requirement for you to adjust some of your rules for how greedy you're being on the amount of profit that you want to take, because that's what you want to pay attention to. You want to pay attention to more bigger picture sets of data on your trading and not necessarily one-offs. So if what you have been seeing more broadly is that you are being too greedy on longs and it's costing you money, so you are making on swings in either direction and it's costing you money because you've been too greedy on those targets and you give too much back, and that's been a consistent issue, then that means that you probably want to be adjusting your general game planning reward profile a little bit lower. And you don't want to look at Tesla as a one-off circumstance that went from 240 to 290 in 3 days and say, oh my God, I'm doing everything wrong and I should have made significantly more money. The biggest thing is consistency. And a way that traders love to mess themselves up is every time they see a different outcome on a trade, they completely change their rules. So last time I took a long swing, I was up a lot of money in it and I gave it all back. So I want to have tighter reward expectations on trades. This time I got out of the position too early and it kept going up a lot, so I want to have bigger reward expectations for my trades. You can't change how you trade every single time you take a trade based off of the circumstance of that trade. You will never become a consistently profitable trader because you'll never be consistent. You're just doing everything different every time. The bottom line is, when you're thinking about how you want to scale out of positions, you want to be generally giving yourself a game plan for that trade prior to getting into it, and that game plan should be based, to some degree on past circumstances on previous trades, but also based on the unique circumstances of the trade that you're in. Is this a with trend trade or is this a counter trend trade? With trend trades, generally speaking, you should be more greedy than counter trend trades. The Tesla example here, I would argue, is a counter trend trade. The thing has been trending down and you're long, even though we did think it could give a big squeeze higher. So that would generally be a trade, because it's counter trend, where you want to be a little bit less greedy. So I think in counter trend trades, booking some at the 80 EMA is a great idea. It's a great target. Booking some at the 21 EMA is a great target. Sometimes the midpoint between the 8 and 21 EMA is a great target to be able to book some profit. You probably also want to book even extra stock on the first day just to make sure that your risk is more than covered. You never want to be upset at yourself if you sold stock in Tesla at 241, because the purpose of that was to be covering downside risk if the trade fails, and then it goes to 290, and say to yourself, oh, I never should have sold that stock at 241. You absolutely should have sold that stock at 241. It doesn't matter that it went to 290. That was a sale that you are taking for risk management purposes more so than reward maximization purposes, you should never be upset by that. I do like the idea of, if there is a reason to believe that the retracement higher could become something more than a retracement higher, then you also want to be greedy with a small percentage of the trade. That small percentage could be anywhere from, I would say, 5% to maybe as high as 40%, depending on the circumstances that lead you to believe that the retracement could actually become a reversal. So therefore, based on this trade personally, my feedback on it would have been to give you a game plan where you're selling some to cover risk very early on day one. You're selling some at the 80 MA. You're probably selling some at the midpoint between the 8 and 21. You're selling some at the 21. And now here with this degree of overshooting to the 21, you've got probably 5 to 15% of your position that you still have on, probably taking even a little bit more of that off today, and then holding a small amount just in case this retracement to 290 becomes a reversal to 360. It would be nice to have 5% of the position if the stock gets to 360, but it won't hurt you if you have 5% of the position and you give it back from 290 to 240. That would be how I would think about it. So appreciate the question. Hope it helps. I did talk about the IWM because you specifically asked about the question. So you could go back into the YouTube and watched about it because I answered your question. I think with a little bit of a detail, though. I didn't have a ton of feedback to give on it, to be honest, just because the market's in an area of broader uncertainty, I think. Yep, cool, no problem. No problem, Varun. Popping over to the YouTube. Let's see what's going on. Steven says, congratulations, everyone. I love to see you guys winning. I can't wait to join the team. Awesome. From Cyril, it's better to be a bit late than early for the reversal. It's very true. Yeah, I mean, that's definitely my experience. I'm good at being too early. I'm definitely good at being too early. Pat is the master of the patience. I think for the first time ever yesterday, Pat took an extension short before I took it, which was fun to watch. I was the patient one. I've learned from Master Pat. Pat took me out into the mountains. We found a cave last weekend in the Tetons out here, and we meditated in it with neither food nor water nor sleep for the entirety of the weekend. And at the end of it, Pat said, I grant upon you patience to be able to be more patient in your counter trend trades. And then today, actually yesterday, the student became the master, and I was more patient than Pat on a counter trend trade. And here we are today. From Cyril, truth is anything can happen, but shorts will try to go for leg 2 for sure. But a lot will depend on the outside of the market, as you said, the economy and the leaders' decisions. Yeah, I do think at some point sellers try to push this market back. They attempt to push this market back. And then we'll get more clarity, actually. We'll be able to garner a lot of information from the real first pullback in the market on how and when and if buyers step in. So, for sure. Great insight there, Cyril. From Steven, any thoughts on Huma? Huma? H-U-M-A? I don't know if I know that one. Humasite. Never heard of it before. Volume profile looks okay. Couple dollar stock. Working down towards all-time lows, off 31% today, so there was news today. I don't have anything for you on it. I don't know the stock. I don't know what the news was that brought it down to 31%. I don't know if this is a name that's working towards bankruptcy or if this is something that is buyable into $2 support. So I'm sorry, I'm not going to try to make something up for you on something that I don't know anything about. from Sir. What do you think about the EU market? The the JER 40. Is that like the DAX names? It has signs of distribution. Do you have an ETF for me on it? I usually just look at FEZ to see Europe. Europe's had a big move in a short period of time here. I can tell you, generally speaking, without seeing a specific ETF for what you're talking about, I still like international stocks at this point. I think that they're just, pretty generally speaking, cheap compared to their counterparts. And what we have seen historically is that I'm trying to figure out what the right words are here, but for lack of better language, government spending is good for the stock market, and government austerity is bad for the stock market. Could be good, bad, whatever for other things, but most of the underperformance from Europe going back to 2010. Look at this. Look at this chart of this FEZ going back to 2010. Has pretty much done nothing for 15 years until just recently, starting in probably late 2023, of a very, very bigger picture, higher low that came in that led to the breakout, which then led to this upper level bullish consolidation, which has now led to another leg on the breakout. But the European stock market here, at least as represented by this FEZ, and I think it's pretty similar regardless of what you're looking at for a Europe ETF, did absolutely nothing for 13 years. And that all initially stems from the European debt crisis, which I traded back in 2010, leading to austerity measures in Europe. In other words, government not spending. Now, what we're seeing here, and this is a result really of the current administration in the United States saying, hey, Europe, you guys got to step up your spending money. You know, we're not going to be spending all this money on you guys anymore. You know, whatever language you want to use. Again, I'm not making this political. I'm talking specifically about the impacts of austerity and lack thereof on markets. Is that the United States, has basically just forced Europe, particularly Germany, to start increasing government spending on things like defense. And I'm pretty sure that the German government just like actually adjusted their constitution or something that goes back to post World War II to enable them to spend a higher percentage of their GDP in terms of, one, debt, and in terms of, two, specifically military spending. So it is that type of spending actually that boosts economies. And it's why Europe was so weak for that 13-year period. And it's also why, and maybe you can make arguments why it's bad in other reasons, but it's also for part of the reason, not all of the reason, part of the reason why the U.S. stock market looks like this compared over that same period of time compared to FEZ. It's also why we bounced and rallied first and hardest with COVID, as an example, was that we immediately turned towards easy money spending, and from the federal level and from the Fed in that COVID period to give a really strong bounce when Europe was a little bit slower to do that, and therefore had a little bit of a slower recovery in multiple ways. Now, the shift that we're seeing for the moment, and there's a lot of other impacts on this, and this is part of the bigger picture thought process that's leading to my uncertainty as we get back to SPY 580 and have this bigger bounce, is that the U.S. is turning to austerity measures, and it's austerity measures that led to 13 years of underperformance from Europe, right? As Europe is actually doing the complete and utter opposite. So there is a and this is a lot of the way in which I approach markets, right? I take like a fundamental thesis and then I make the technicals or wait for the technicals to actually confirm that thesis in order to be able to execute. So the potential fundamental thesis that this all leads to is rotation out of America, lower growth out of America, rotation into Europe, higher growth out of Europe, therefore a weaker U.S. stock market over time going forward, and a stronger stock market in Europe going forward. That could potentially be compounded by the fact that the U.S. stock market trades at a significantly higher border multiple than many foreign counterparts. That definitely includes China. It probably includes South American markets. It probably includes Europe. And if you combine high multiples with slowing growth in the US, it's a recipe for a potential bear market. I'm not saying necessarily that's happening. And if you combine lower multiples and higher potential growth in European and Chinese markets, then that is a really big bull case for those markets and for potential rotation. Now, obviously, at least when it comes to the U.S. market, the counter argument on the austerity measures is that we're not really going to actually have austerity because we're going to be cutting corporate taxes by so much that we don't actually like the real idea behind like true austerity in the US would be that we start to reduce the US government deficit. And whatever, we haven't had, I don't think that there's been a surplus since the Clinton administration. But if you, for example, were to do the austerity measures that the US government is currently doing and not cut taxes, then that probably would lead to a surplus. That probably would be good for the deficit. It probably would be bad for the stock market. But it could be that, and it's to be determined because we haven't heard really anything out of the administration on tax cuts. But everyone seems to be leading to the conclusion that the whole reason why we're doing all this cutting and not spending money in the same places that we used to is so that we can cut taxes here locally and reinvigorate the private markets. And then I don't know what the balance then is of the amount of money that we're not taking in from taxes versus the amount of money that we're saving by cutting forest worker jobs. That's just one example of the many things that are being cut. I don't know what that balance actually looks like to know if that will become true austerity in the U.S. or not. That can further lead to underperformance of the U.S. market versus the European market, and it all circles back to my broader thought process and thesis, which then I need to overlay technical analysis on, and I need to overlay market dynamics on. That gets me back to SPY 580. That gets me just very neutral at that point without conviction on further directional moves in either direction, because I just feel like I need more information. It's like I said, the market dynamics have become more conducive for bulls right now. That's very notable. The technicals at this point are neutral to bearish, depending on what time frame that you look at. And then, the thesis at this point, for at least the U.S. market, just requires more information, I feel like, at this point, with the stuff that I was just saying. What do tariffs end up looking like? What does the degree of austerity end up looking like? And what do tax cuts end up looking like? And we just don't know any of that. We just don't really know all that information yet. So it's tough. But, broadly speaking, at least on the European side of things, I almost feel like there's more clarity there than there is here. They're spending more money than they have previously. So when I look at this FEZ, and again, I don't know if you have a specific ETF that you want me to look at. This is just the one that I tend to look at. I'll be honest, I'm not even 100% sure what the components are of it, but I'm pretty sure it's just like the top 50 European stocks or something. And Now I'm getting a false. This is a false print. It's not actually, this candle right now is not real. But that leads me to look at this as an uptrending market that's going to continue to uptrend. But, you know, things work in cycles where they pull back as well, right? So one of the things that I was saying was into this up move in the U.S. market, we probably get like mean reversion of mean reversion, meaning like the mean reversion of what we have seen in February and March, which we haven't really seen in this 15-year period that I just described, is U.S. equities down, European stocks up. This bounce back, I was saying, would probably give us mean reversion of that mean reversion, where if we can get this, quicker bounce back in the U.S. equity market, we probably actually see some weakness in those foreign markets for a brief period of time, and then from there, those European markets, those Chinese markets, and that's why I was kicking myself a little bit that I didn't buy China today, but I just want to be a bit more patient. And if I bought it today, I would have bought it small and I would have built in. But I do think that there still is a strong case to be made for continuation in these European markets as we see more deficit spending and more government spending come online from the likes of Germany and France and others. And we have China that is engaging in stimulus as well, so they're in an expansionary policy mode, which benefits the Chinese markets. And again, the U.S. is doing like the literal opposite right now at the moment, which is one of the bear theses. So great question. Probably much longer-winded answer than you were looking for. But there's just a lot to unpack with that question. From Apex Joy, isn't it strange that the VIX is down but UVIXI is up? Yeah, I don't know why that happens, to be honest. We see it happen. I don't know enough about the structure of the product. The UVIXI is like an ETF that just trades on more cash, and the VIX is the actual VIX. Like, you can't buy shares in the .vix that I just typed up. We do see that once in a while. It is unusual. I've never bothered to research the why behind the structure of what causes that to happen once in a while. And I'm not, I don't have anything overly important to say about it. So I do prefer when they confirm each other, though, generally speaking. Okay. S&P is coming out with comments on the U.S. economy. They forecast inflation to remain closer to 3% in 2025 as tariffs increase prices alongside domestic supply chain for end consumers. It comes amid shifting policy a shifting policy mix that is altering economic outlook with the balance of risks to our growth forecast tilted to the downside. They're just repeating the same thing everybody else is saying. Inflation expectations potentially are increasing while growth expectations are potentially decreasing. Export Administration regulations in Federal Register adds 70 entities to export restriction list. Okay. All right, cool. Looks like I got through all the questions. Some really good questions for today's afternoon meeting, so it led for a nice, good long afternoon meeting here. Hope everybody is continuing to have a really good trading week, and I will see you all tomorrow morning. Have a great night. If you're on YouTube, give me the thumbs up and tell your friends.